So as usual, the first commodity we normally take on is the US oil commodity. And for the last 24 hours, it has been quite a profitable trade on the US oil spot, as you can see here. So let's run through how the week started for us and what was the basis and what was our conclusion during the live session yesterday as to regards to how we are going to be taking advantage of any trading opportunity in this market. So the first thing we saw here at the beginning of the week was how price action started on the bearish note at around the $70.15 level, as we had that area as our resistance line since we saw selling pressure from that area. Then we saw how price action dropped into the $69.35 level, after which we begin to see some buy pressure resume around that zone. So the $69.35 level happened to be our support line for the week, and since then we have seen our price action had continued to find higher highs in this market. Now, with the flat channel we identified here yesterday, we agreed that we are going to be having a buy stop order just right above the $70.15 level, where a breakout of that structure will give us our first buy position for the week. And a couple of hours, I think during the live session, we had a buy position already, which was running during the live session. And I also mentioned here during the live session yesterday that if price action continues further to break out of the resistant line of that descending channel, a retest of structure will give us more opportunity to add more position to our existing trade. And to further guide this expectation, we also identified this key level at the $70.40 area. So we said breakout of the $70.40 and the breakout of the resistance line is going to be giving us an opportunity to buy. And since then, you saw how the first position here moved about 160 pips in our favor before this whole bearish momentum began. Then the second, if you had missed out on the first one, the second position here also moved about 130 pips approximately before the bearish momentum began in this market. And I hope you all moved your stop loss accordingly to lock in some profits. You know how we do it here. As soon as price action moves significantly well in our favor, we definitely want to be moving our stop loss to lock in some profit. And if you have done so, you must have been taking out of that sell buy position at this point with about approximately 100 and 150 pips if you are taking the two positions that we had there. So with that being said here, let's see what is going to be our expectation for this week. And for those who still have a sell position running, for those who still have a buy position running, well, I would advise you to move your stop loss right now, and anywhere around the $70.80 level seems most appropriate to lock in your profit at this particular point in time. So with a well secured position right now, and that is for those who still have a buy position running, let's go right into the 4 hours time frame so that we can see things from an holistic point of view as we get prepared for the New York session today. So going into the 4 hours time frame, there was a little tweak I had to do this morning after monitoring how participants in this market has been reacting to that current structure we have here. So for the sake of clarity, and for those who are not part of the live session on Monday, that is yesterday, let's quickly run through the perspective we saw here on the 4 hours time frame. So right here on the 4 hours time frame, what we did here was to take into consideration trading activity since the beginning of the month of April. And it is quite obvious that price action has been bearish, and as a result of this, we connected the series of lower highs as you can see here and a series of lower lows, which gave us this descending channel that we have here. And it was on the basis of the descending channel we have been making our decision in the last couple of weeks in this market. Now, there is something interesting that happened around the structure during the, hold on a second, I want to take this one out so that things will look a little bit more clearer for us. So I will just, okay. So I think it will be better now when we go back. Oh, beautiful. So now something interesting happened during the course of last week's trading session, where we saw that at one point in time, we saw how price action broke out of the resistant line of that descending channel. And then we saw some breakout a couple of times, and then price action dropped back below the resistant line again during the later part of last week's trading session to drop below the resistant line. And with the situation we had here this week, we saw the bullish momentum breaking out of the resistant line one more time to push price to the upside. And what I did this morning was to project this trend line into the future to capture how price action has been reacting to this level since the second half of last week. So we had another new trend line here, which definitely is going to be part of what we are going to be using to guide our trading activities going forward. So now let's zoom into the current structure. So what has been going on here since the later part of the New York session yesterday? So now you would notice that as soon as price action got into the $71.38 level, which also shares a confluence with our trend line, we saw how sellers came in to negate the bullish momentum. Though the week has started on a very strong bullish note, but as soon as price got into the $71.38 level and the trend line we identified there, we begin to see how sellers negated the bullish attempt. And this has lasted for about 1, 2, 3, 4, 5, about 20 hours now, roughly about a day now. We have been seeing the multiple rejection of this area. So at this point in time, this level is going to be serving, in conjunction with the trend line, is going to be serving as our yardstick for trading activity today. So there are two perspectives we are going to be looking at based on this current structure. So let's first of all talk about the potentials of the sellers in this market. Obviously, it has been a very strong bearish move since the beginning of last month. So it is very likely that sellers could still take over this market at any point in time. So let's look at the potentials of the sellers around this area. So one thing I'm looking forward to here, following the impulsive move we saw at the beginning of the week, coupled with the continued selling pressure around the $71.38 level, we might likely be seeing price action drop further to the downside, hereby respecting that trend line one more time to incite a sell-off in this market. So what this simply means is that as long as price action remains below the $71.38 level that we have here, we continue to feel comfortable in our sell position and look out for more opportunity to add to our sell position. So that is the sell perspective in this market currently. However, if price action at any point in time breaks out of the $71.38 level, which you can see here, and also it shares a confluence with the trend line we identified earlier, then at this point we are going to be seeing this as a bullish signal. Remember, we are not getting too excited at this point, as we still need some confirmation to happen before we are going to be joining that bullish move. And remember, it's a very strong bearish momentum here. The breakout of that structure could turn out to be a false breakout. So that is why we will need a confirmation that will prove that buyers are gradually gaining that momentum. And this will reflect on the chart in the form of price action doing a retest of the structure. It could be the retest of the $71.38 level or the trend line that we have here, where the appearance of buy pressure on our lower time frame will give us the confirmation to be part of a bullish move. And we also have a structure at the $72 area, which was a very significant level in the last couple of weeks in this market, which if a breakout of that level also happens, we will have no other choice but to add more position to our existing trade. So this is the holistic perspective on what we are going to be looking at on this chart. So let's dive right into the lower time frame. Let's see how participants in this market has been reacting to the structure since the beginning of today, and also if we can see or identify a simple setup that we can use to guide our trading activity for this week. So moving down into the 1 hour time frame, this is what I was able to spot out on the 1 hour time frame. Now, if we consider the continued rejection of that structure and the trend line there, it appears price action is gradually transitioning into a reversal pattern in the form of a head and shoulder pattern. So we had the left shoulder here, we had the head, we also had the right shoulder with a very sharp a sharp shooting star candle, as you can see here, which from a technical standpoint is a sign that reveals the presence of sellers around this area. And you all know that whenever we identify a reversal setup like this, the next thing we want to be doing is to identify the neckline of that reversal pattern, which I was able to spot at around the $70.91 level. Now, for this reversal pattern to be valid, we definitely need that neckline to be broken to the downside. Though we had some breakdown here in the last couple of hours, which for me isn't very satisfying actually. As you can see, we have something that looks like a hammer candle where the price action resumed back into the $70.91 area. So let's see how this is going to play out. So most importantly, what we want to be looking out for here is a breakdown, and when we scale down to our lower time frame, we want to see retest of structure, signs that buyers are finding it difficult to climb back above the resistant line, that trend line there. Then we want to be part of a bearish move to the downside. And there is a caveat to the setup here. If you remembered yesterday, we acknowledged the key level at the $70 area, which happened to be around that resistant line at the beginning of the week. It now depends on how price action reacts to the structure that will determine if we are going to be adding more sell position to our existing trade or getting ready to buy. So as soon as price action gets into the $70 area, that is, if we do have a breakdown retest of the $70.91 area and price action gets close to the $70 area here, what we want to be doing is to move our stop loss accordingly to lock in some profit, as we want to see how price action will be reacting to this level. So if a breakdown of the $70 happens and retest of structure, then we want to be adding more sell position to our existing trade. But if instead of breaking down that level, instead we start seeing buy pressure resume above the structure, then at this point we want to be part of a bullish move. Breakout retest of a reversal pattern on our lower time frame should trigger a buy position, and the tendency of price action breaking out of that resistant line becomes higher at that point. So this is how we are going to be trading this if price action ever drops below the $70.91 level. Now, in as much as we're looking out for selling opportunities in this market, we also want to consider the potentials of the buyers in this market. And considering the fact that buyers have been gaining some momentum since the beginning of the week, there is a chance that we could have a breakout of this old choppy situation that we have been witnessing here in the last 20 hours in this market. Now, for us to buy the US oil spot for today, what do you think we can see from this current structure that will give us the inclination that buying momentum is now becoming stronger? Well, personally, what I want to see here that will make me buy the US oil spot for today is for price action to break out of this trend line that we identified on the 4 hours time frame. And if you look at the trend line there, it also shares a beautiful confluence with that $71.38 level. So a breakout of both of the structure will be a very beautiful signal for us to be part of a bullish move. Now, when the breakout happens, remember, we are not getting too excited, as we want to see a confirmation to happen, as the breakout of that trend line could turn out to be a false breakout. So we need to see a confirmation that gives signs that buyers are gradually gaining momentum, and this would reflect on the chart as a retest of the structure, that is the retest of the $71.38 level, or the retest of the trend line, where the appearance of buy pressure will give us an opportunity to buy. And with the buy position triggered there, we want to have a buy stop order above the $72 area, where a breakout retest of that structure will welcome more opportunities to buy the US oil spots in this market. So this is what we shall be looking at on the US oil spots for today, and I hope that you get prepared and be on standby to catch any of this opportunity that will be happening today. And to make things a little bit more simpler, you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the US oil spot for today. If you do have any questions, feel free to let me know right in the comment section.